Welcome back. Today, what day is it? Day 8. Alright, we're gonna be redoing the entire 2024 of Bitcoin with the 5-minute model. Right? Up to August, no, September 15th, which was when, September 15th of 2025, which was when we switched to the 5-minute market maker model. Alright, let's get straight into it. Okay, down. Alright, and let's go and see. We're back to here. Yeah, back to here. What was that? January 2nd something. Alright. Oh, we got some more channels to show. This one we missed. Ah, that's right, we missed this one. Because they swept this. And then it went up. I'm pretty sure. I remember. Yep, that's right. Sweeping the all-time high. Now, I would be interested to see, what has happened. Alright, from what I can see, this looks like the start of the consolidation. This here, consolidate. You'd argue like accumulation here, accumulation 2, accumulation 3 to the smart money reversal, right? Whatever you want to say it is. Yeah, and let's see. So we swept it here. Let's see, from here on, what have we done? Right, we need to do a anyway for it to close here. I think we closed here. So right here was our first low that took place. I'm waiting for. Oh, did we have any fair value gaps being formed? Inverse fair value gaps, anything? This one here. No, we didn't respect it. There's one above there. Okay, we respected this really well. So we got the 5-minute inverse fair value gap respected. Didn't really overlap with a. There's no overlap here. There's 5-minute breaker, but that's not like really respected at all. I mean, close to here, and we can't use this. This sword buck. This doesn't look too good. It doesn't look too good at all. I wish it left a fair value gap. Did it? Maybe I'm wrong. Why is this price action so trash? So trash. Now if I draw from this one to this one, which is the mitigation block. Okay. Maybe, right? Overlapping with this, or like one of these fair gaps, which then see, our question is where, in this case, where would I put my stop loss? Would I want it at the intermediate line? Right, we just swept this. Do we want to go down in reverse? Just swept it. We do have the phases out properly. Actually, all right, if we can respect this and then go back down, that's when I'll be looking to get another one in, because you know I could put it at this, which rebalance off the inverse fair value gap. But I mean, let's frame it with these two trades, right? Let's do, because I want to see if this one will even hold. Or if I should just wait to see overlapping confluences and then move how I want to move. So this one, we could say, we could target these right here, if I put it at the beginning, bottom of this. This is trade one, right? You should put it a little bit above. This is trade one. This inverse fair value gap is respected well. Right? There's a fair value gap above here, and all this stuff right here. However, I would like to say that if we can rebalance off of this, because okay, all my trades, they have been, the stop loss has been paired with like a fair value gap plus an order block, which is a strong stop loss. So that's like the extra confirmation. But this one is purely the inverse of our gap. Okay, so whole purpose of backtesting. I'm going to frame it with two trades. Had a good run, bro. All right. It doesn't look like a smart money reversal. Like price action doesn't really look like it. Looks like consolidation. But I mean, no, we got it right here. Or is this manipulation back up? All right, all right. It's a possibility. It's a freaking possibility. Doesn't look like our traditional high quality trade, anyways. But the confluences, they kind of line up. Wait. This order block was not respected. What the hell? This one wasn't respected. This was respected. With the mitigation button, you know what? How about this? I wait to see if this is respected. If it's respected, I'll put my stop loss there and enter off of here. That's what I'm gonna do. That's exactly what I'm gonna do. Reason being, because. Or am I wrong? Okay, let's see, right? That's the whole point of backtesting. Let's see if we should even consider that. Or does it have to be an over? Well, let's see. Let's just see, right? So trade one is this. Trade two is seeing if what happens there. Let's see if we get stop loss. All right, you see trade two. Trade two would have been like, oh, saw good respect here. We got the extra confirmation. Probably enter something off of this. So this would have been trade two. This would have been trade two. Matter of fact, let me find exact how I would exactly frame it. Okay, got that. Let's see from here to here. You know, I probably put it over here, bottom of this. All right, this is trade two. This is exactly how I would frame trade two. It's because there's a little fair right there. All right, let's see. Now, actually, trade two gives me a little bit more confirmation because they respected that fair value gap pretty well. Respected, which overlaps with this. So we'll see. We take the L or goes up, smack more all-time highs. I'm tough. I'm genuinely tough. Like, you see this? You see this? I'm tough. I'm so tough. Oh my god, mark my words. A year from now, multi-millionaire. ALVI. Mr. Motherfucking ALVI. Oh no, I don't use that. I don't use that anymore. Well, I'm gonna say it's a 1 to 3. So we took a dub off of this. Bitcoin chain. Oh. 1-0. 3-0. Alright, 2 trade ideas. Bitcoin, short, January 9th. Alright. I like this. I like this better than. Oh, shit. Okay. Alright. Beautiful tree. We'll document this. So so let me see what happens. Actually, let me, before I do this, let me see. Do we sweep while I'm behind him? What exactly happens? Okay, okay. So you don't get greedy, guys. Don't get greedy. Of course I could put it down at these lows right here, but look what happened. Never get goody. No goodied. No goodied. Damn it. I didn't have this labeled out. Damn it. What number was that? 153? Right. Go retake that picture. Oh. Okay. Price didn't look as clean, but we still have 1 minute relation. I'm gonna be right back. What is good, everybody? I am back. I am so back. So back. Uh, Let me do something. Actually, sorry. Let me charge my phone. Okay, did I document this? Okay. Oh, trade 2, I need document trade 2. Trade 2 is the same thing. Besides, we wait for the double confirmation of this, right? Since it overlapped with this, the breaker, overlap with the breaker right here, as well as the FEG. Enter, where would I have entered? Well, I would have drawn it from here to here, which would have been the bottom of this FEG, the top of this. Top of this. Okay, this would have been crazy. But did it even hit? It hit, right? This hit. Yeah, that hit. That hits. Oh, we didn't. Oh wait, wait. Oh shit! Wait, we didn't hit this. Oh shit! We didn't hit it. Nah, this one would have failed. Failed. Oh my goodness, this one failed. Trade one would have still stuck it out. Yeah. Damn. Damn. Serious? But this was so good. Another question. Would I have, did it hit this first? No. I would have put mine right here. Hmm. Hmm. That's crazy. That's crazy. Is that just Bitcoin for you? Mr. Bitcoin? No, I want to put it there. I will put this. This is the intermediate term. Turn on. No, I would have put it here. I would have definitely put it here. Because that's the actual respect of it. Right? It aligns with this fair value gap. It aligns with the mitigation block. So there's some overlap here. So I would put it there. I would have smacked. I would have smacked. Ooh, Shiba. Wait a minute, Shiba. Damn, I got souped in this one. They souped me.
So we literally have up to a buy side liquidity high. Okay, retail traders too confused. I'm literally going to be right. We need it is low. We learn and too much. The update also wicking did. Price came up. Look how close it. Right? He is formed high, but as you can see, right, you can make a block that.
Hmm. Hmm. Okay. For this trade, maybe next time I'll just put it at the sort of the original high. Cause I was expecting, okay, Kevin here and just go down. But I mean, we did have that, but it was a wick. It was a wick. So we didn't put it. Hmm. But that's based on trader discretion. Fix. Stop loss. Hmm. Yes. Okay. Stop loss. Just because it's equal highs. That's fine. We still take the dub on the first trade though. That's fine. Right. All this can I just remove all these ones? Oh. It could go higher. This kind of does look like a continuation of higher. Especially on this 1 hour right here. Where we just swept out all this liquidity from here. Tap into that pretty well. Going up, swept. Wish we could have swept these bad boys. But let's see, let's see what happens, right? You know, take it level by level. Or wait for upwards. Change character. Okay, alright, buddy. We got this. But then we got this, so I won't even look at talk about. Our next point of interest is probably one down here after all those sweeps. Alright, let's see. Hope price will go up and sweep. That I don't. Yeah, we did one final sweep up. Hold on. Actually, hold on. You know, we could frame another one right here. We could frame it. But we go down, sweep these right here. Tap into this. So hold on now. We could get another potential short. Right. Instrument term low, but actually this created a lower low. If you look at from here to there, but we never did a change of character from that. All right, these are the lows, so it kind of needs to go up here. I'm not gonna be looking at enter trade. No short. Simply based on market structure, and it kind of needs to break below here to confirm this intermediate term low. But at the same time, we can kind of break off these intermediate term lows. So it's the same thing. That's where Mr. Point Control comes into play. Angry Bebop. You know, I still think we have this stuff lower for the target. So we swept both sides. I mean, we got this one right here. Swept both sides of the move. we have this little one right here, a little small one, but this is like on the right side of the movie. I don't like how we didn't close below here. Let's see, we have anything else in that? We got this bad boy right here, overlapping with this right here. Oh, that's not the right one. Yeah, this bad boy right here. 5 minute. All right. Okay, I see it. All right. I'm gonna wait and see how price reacts here. All right. Hopefully we sweep all these up, respect this, and then tap down into lower liquidity. Right. That the move up was kind of violent, sweeping out both sides. So you know. Or we just go all the way up. But I mean, we could go up, could go down. Could go down. We do have this here. Alright, we do got that there. We do got 1, 2. Just one reverse here. Let's see what happens. We go up and tap. I'm like pretty certain we would go up and tap it before tapping into this. Matter of fact, I'm like very certain. What? We tapped into this? Okay, we don't want to sweep it. Never mind. Okay. Now, matter of fact, I think we go and sweep all these highs right here. Look at all these liquidity right here. Low resistance. Oh my goodness, that's so low resistance. However, we have this. We have distribution 1, distribution 2, distribution 3. Smart money reversal was respecting pretty nicely. We got a change of character right here. Here they got a little. Isn't there a little FVG right here? I mean inverse right there. Well, I don't know why it doesn't. Did we even tap into that? Oh, did we? I don't think so, no. Okay. We didn't tap that. We tapped that. There we go. We got this right here. All right. I'm not gonna be trading this until we close above this right here, and then we got this little block down here. And this was respected. So let's see. I'm waiting for a trade through it. Let's be through it. Then I already missed the trade. I missed the trade. Oh, I missed the trade. It's probably gonna clear up all this liquidity right here. Now, I want to cut this now. Trade through it. Trade through it. If there was like a green one in here, but there wasn't. It was straight red. So I'll trade through that. I'll trade through the breaker. Okay, we trade through here. That's fine. We missed the move. We were not gonna catch this. No. Got all this already. Now, if we respect here, I might have a bias for more down. But it's kind of like we just reversed off of this. We just reversed off of this. So is it really going down or is it really going to go up? Because we need to identify the correct phases. I mean, you could argue this is original consolidation. But at the same time, we just had this reversal. Right. But let's just see, right? Let's see. I gotta close below the... Okay, we are respecting this extremely well. We did close below here. But we swept this. Right, we swept this. So my thing with this is that if we were to enter off of this, this looks pretty good to enter off of. I respected that. Swept this bad boy up here. Any FPGs being respected? No. Let's see. Okay. Hmm. Okay, the 5 minute, I'm liking how I get more possible entries. The 30 minute, I would literally wait. Heck, one trade a week or two. So, okay. We have this, we swept this. I wish we respected a PD array. That would have been pretty good. But we didn't. No. Unless we respect this. Would I have entered on this at this exact moment? No, I wouldn't. I would not have entered off of this. Simply because I wish we had a stronger respect of this. Look at this wick. I wish we closed like below this. If it closed below this, I would have entered. But the reason was so high time frame, sweeping all-time high, right? Bias, right? For short, we have this tap here, a little tap here. Bias for a long, however, that market maker consolidation I just showed, where these, I was gonna say these are most likely gonna be swept. If we get a good tap of this, I'll be looking to enter, sweep this, but then we kind of already swept this as the original consolidation. You know what? Yeah, I'm gonna go with my original statement. I'm not going to be looking to enter. Reason one, we didn't create a change character or a market structure shape a breaking structure here. Right? Off of this respect, I would ideally want it to go respect here. Number two, we kind of swept off this original one, sweeping off all these lows right here. And I can't frame a bias for long because we just swept this. Right? Maybe if it were to maybe only sweep this, go back down, tap this, and then go up before sweeping this, I would be looking to long it. But I'm not going to be looking to long it. I'm just going to hold my hands and see whether or not we respect our... Okay, we got the respect. Right, we got the respect. We got the respect right here. Right here. Because that's going to be a short-term low. We closed this candle closed above it. I mean below it. And we didn't close outside this, so okay. Now I'm going to be looking to enter, but this one, oh, this one I have to test, right? Wasn't that the that's what it is. That's what it is. Okay. Alright. Yeah. Like, it's not. Alright. So this is what I'm talking about right here, which is this area right here. Let's see. Okay. Let's go and see. Let's see. Let's say I entered here, right? I entered here, original consolidation. I really shouldn't be entering here. I really shouldn't. I really shouldn't, but we just swept that. I want to go down there, but... Alright, let's see. Okay, so... Let's see. The pros and cons of this, right? Con 1, we swept this original consolidation. Swept it. Con 2, or this is not the low risk short that I normally would test, right? This is more so like a different phase of this distribution. Yeah. 3, this looks like a smart money reversal, the start of a new phase. We swept this. You know what? Okay. Oh, let's see. Oh, goodness. Let's see. Okay. Okay. I do need to backtest this. I do need to backtest. So I listed 4 cons, right? What are the pros? Pro 1, we swept all this liquidity, right? On from here to here, it may look like a leg lower, right? Because we had this liquidity right here. We tapped in here, and we tapped into our mitigation block slash fair value gap, which overlaps, forming a unicorn. And I can use that as the intermediate term high for a leg down lower. And there's some targets here half size. I go half size on this. Okay, I'll go half size, but realistically speaking, I do need to backtest this a lot more. So I'm gonna half size. Half size on this. So we would have gone entered, right? Oh no, I waited for the respect of this. So we would not have gone entered then. Okay, now we would have gone entered. Which is okay. 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 Got it. You know what? You know what? You know what? Do I make an executive decision to just remove that? I'm pretty sure I'm 2-0 with that retracement thing. Okay. January 10th. Right, is that what I mentioned? Only cons of that? The pros. This was the pro. You know, honestly, should have canceled this. Okay, you know what? Okay, actually, looking back, should have canceled since we swept our original consolidation. Yeah, okay. Let's see, I'll put number, if original swept, swept, see if we can put cancel trade. Yep. Okay. That's gonna be a hard rule from now. Not like a difficult rule, it's more so like a embedded rule. Alright, that's fine. Attention. Okay. Alright. Now, backtest some more. Alright. Okay, now my draw is, I'm pretty sure we're gonna sweep this. I'm like pretty sure. Okay, we swept it again. We swept it again. Okay, let me identify consolidation. Right. I think we swept the consolidation. There's no consolidation until like, I mean, you are down here, but that's a little bit farther away. See, I would say this, but it didn't really. We kind of swept this, and so it's not a. This could have been it, right? We had original consolidation, distribution 1, distribution 2 to the upward one, but no. At the same time, you could say this one was, or this one is, but we just swept it. We swept all this? Okay, I'm not gonna enter this trade. No, there's no more draws on liquidity. Even though it may go down, I'm not gonna be looking into it. Alright, next one is maybe this Ferrari gap or something. Okay. So it did reverse. It did reverse. But it wouldn't have gone. I wouldn't have been able to enter off of that. Plus we kind of swept the thing, so that's fine. take it on the chin. Alright, next area. This potential area. It could be potential right here. As well as, what is the next area? The next area is... The next one is like down here. Okay. Ideally, we get a little bounce. Ideally. You can mark off. What is that one? Why is someone showing? Alright. Then you have distribution 1, distribution 2, potential smart one reversal. We just complete the phase maybe with all this. Oh, almost. Okay. Previous weeks are all around here. So yeah, that's my line reversal. Potential to complete that phase. Let's see, what do we have? We have this right here. Five-minute breaker. We also have a, I also got this intermediate term right here. Right there. Now we got this one being respected. So if we were to frame a long, we could use this. Matter of fact, let me go through price action. See what happens. Okay. Here's where we're at, right? Okay. Question is, do we put the stop loss here or do we put it here? Now, I know in the previous trade we mentioned that there was equal lows that we took out on this trade. And that one respected off of that and that. Yeah, it's this trade. Which is, in this case, it's a similar thing. Where we have a little bounce here, goes up. Oh, goodness. Question is, do we put it at this low or the low of the breaker? Breaker and FEG, which is also a pretty high quality intermediate term low to utilize. So I did say this was up to user discretion. Right. Okay, so if it's off of the original 5-minute, I think we should use that. The original. This one wasn't. I didn't have a little 5-minute one. This one. Went down. Went up. Okay. The point of control for this is probably a little bit higher. Okay. Okay, if I were to take it here, pretty sure this is within discount. Okay, you know what? I'll put it here. Okay, we would have entered here. Alright, let me see. Okay, it's not really. Oh, it's the 1 hour demand zone. Swipe all this, swipe this. One. The next, okay, so if I don't take this trade, the next area of interest I would have is the cluster of lower liquidity right here. Yeah, because in this, okay, all right. Okay, that sounds good. All right, you know what, that sounds fine. That sounds fine to me. All right, that sounds fine to me. Higher time frame, we could be doing a distribution up here and lower, but lower time frame, it doesn't mean we can't catch that lower high that will be forming like this. Okay. Our confluences, we have we have this. Yep. We have this being respected. Yep. Right. Yep. All right. All right. This okay, and then we're going to target. Maybe toward this. Let me target that. I'll target that feature. Okay, target that. All right. Let me see the daily again. I mean, I don't really have a. Did we close here? No, I don't really have a clean bias. All right. The 1 hour, that's off a volume-minus demand. We have original consolidation not being swept here. We also have all of these low resistance liquidity one right here. All right, you know, I'll take this trade. I either enter here, and I'll probably just enter off of this market thing. Market entry right here. On top of that, if I take the L, we take the L. Yeah, take the L, take the L. All right, let's see. Oh, we took the L. Okay, that's fine. That's fine. We take the L. We want to go lower, so this. 1 for 2 with this. The demand zone is not doing too hot. It's not doing too hot at all. And 58. $159. It's fine to go. Go on to the next one. Include all this. The next 1 hour draw is literally this cluster right here. Like, I'm not interested until we sweep all that. I don't care about this. We could go up, tap here, go down. I don't care about that. But how long is this? A week? I can wait a week. It's fine. We're sweeping this. Now, do we sweep this? Or this? You know, it kind of depends on... I mean, we take it level by level, right? Okay, this looks like a straight up. We wouldn't have caught this. I would have said this could... We could argue this is the consolidation point, right? The distribution 1. This might want a reversal, but I'm trying to... Or we could argue this up here. Alright, original consolidation. That's gonna be like distribution 1. Like distribution 2. And then all this stuff. Distribution 3, whatever you want to call it. So it's like 1, 2, 3. Or you can be like 1. You can be like 1. And do like 2. And then 3. Sweeping and tapping into all this higher time frame liquidity. Now let's see if we actually respected. This one looks respected. 5 minute was respected. Yeah. Oh, this is a breaker. Yeah, it's a breaker. Now we go here. Oh, okay. could use that as the potential intermediate term low. We can probably put it like up here and then target something up here. But the thing is, we would miss our trade pretty much. We would have missed our trade. We would have missed our trade. I mean, there is this bad boy up here. There is this bad boy right here. Let's see, do we even retrace back into the zone? We tapped it. I don't think I would have entered. Yeah, I don't think this is the exact trade took out on, where it's like it's not the low risk buy, it's sort of like some accumulation happens or sideways consolidate. Let's see, we take it out. If we do, this would be like 0 for 3 on the different trade. Yo, what is this sideways consolidation? I was gonna say this looks like a smart money reversal, but there's no original consolidation that led to it. Unless, no, this looks like a smart money reversal. This looks like consolidation. But this is a smart money reversal to the higher time frame, yes. You can also say this is accumulation 1, accumulation 2, sweep of that, tap into that. Higher time frame PD array. We get our reversal here. Here. Huh. And again, look at all this sideways movement. Saturday, Sunday is always sideways movement. Straight chop. Alright, I don't think I was going to frame a reversal, but to be honest, this really looks like a smart money reversal. So I'm not going to enter short here. I'm gonna look and eye the long to see, but at the same time, it's not really the low risk buy we have. Okay. If anything, this is the 5-minute retracement. There's definitely 5-minute retracement. This. Okay, I wouldn't enter off of this, by the way. Wouldn't have entered off of this. Could we argue that this stuff is original consolidation? Could we not argue that? Saying this is distribution 1, distribution 2. We say all this is distribution 2. Distribution 3, smart 1 reversal, tap into that. But this would be a... Where's the daily? Where's the daily? Okay, I don't know why it does that, but let's see. Wait, that's not even off a 1 hour. Pretty sure this fails. Okay. Okay. Okay, so I didn't take the trade because of this. No more retracement signal. Alright. I'm not like feeling that. Backtest. Sample 6 failed. 5-minute signal on retracement. We're 0 for 3 on this point. What long is this? January 27th. Oops, not that one. There's do this as 1, do this as 2, we'll do this as 3, and we'll do this as as 4. What's this? Okay, now we'll do 1 symbol. Actually, so our time frame. Alright, was framing a long. Alright guys, I'm probably gonna eat lunch right now and then get back into it. Probably done 1:32, something like that, but I'll see you soon. That's 2 hours ago. Yo, we are back. Probably gonna back test until like 5. Probably gonna go to the gym, take a break, come back at like 8, something like that. Alright, we took the L on this. Why did we take the L on this? I just ate dinner. I mean lunch. This is off the retracement. Okay. All right. Actually, if I do that, yeah. Not recording? Why am I recording? This, this, this. Alright. Probably gonna see all this stuff, right? Yep. We tap into this. We do tap into that. We tap into anything else. We tap into this. We got this. We got some of this. Alright, let's go and see that. We get a reversal. Any reversal. We got this clean move here. Clean move here. And then we got distribution 1, distribution 2, 3, or you just leave it like differently, like distribution 1, distribution 2, distribution 3, small reversal. I'm gonna wait for the intermediate term high to be taken out, which we get here. If we were to reverse, we do close through this breaker right here. Inverse somewhere? We got this inverse right here. Do I take this trade? Wait, this is one because of this. We have this order block. It's not as clean. It's not as clean at all. The fact that we are disrespecting this 5-minute order block is kind of concerning. Very concerning. I think we might go lower. So it's telling me we go lower. It's not really respecting this order flow. As clean, I mean, here it is. But at the same time, we trade through here, but we don't respect it. Trade through here, I don't respect it. Let's see the one day. It might just go down and tap into this other stuff right here. This one, not. Let's see the 1 hour. Oh, this is the 1 hour? Oh, that's what the one day. Yeah. It's telling me we go lower. It looks like a distribution leg lower. Well, okay, let me tell you why. Couple reasons. One, we disrespect this 5-minute order block, right? Because we create it here, we create a fair value gap, go up. It would normally be used as the other way around, but we actually close below it. 2, same thing with this breaker blocker. It gets formed here. We close through it, but it's not really respected. Matter of fact, we disrespect it. So it may not be an area where they may be looking to reverse from. Yeah, I went into this trade. Nope. Not at all. This is concerning. Yep. That's good. Alright, we'll count this as avoided. Alright, that's fine. We avoided one. The next one is, this one? This one, and we got this one. Next ones are going to be this one and possibly this one. All right, I'm a little bit interested here. We wick pretty well off of those. Yeah, we wick pretty well off of those. That was a distribution leg lower. I mean, potential for this to actually be our area of liquidity that we can reach. I mean, we're gonna be like maybe like one here and do this for the two. As I'm looking above here, it's not really like there's low resistance liquidity, but there's no original consolidation until maybe up here. Well, let's see what happens. What do we get? Okay, this looks pretty good so far. Looks pretty good so far. Don't like how we closed below here. I don't really like that. Put this right here. Full blockers respected. Yeah. Break the blocker. It is formed and it is traded through. So we could say this is the low and use that. This is the long-term low. Put it right here. Bottom of that. Take profit. Maybe like right here. Not tripping. Maybe I mean this is low resistance. All this is low resistance. All this is low resistance, so we could put up here. Could very well put up here. Alright, bottom this. Now we could extend this to be here, but that would be long-term low. Feel me? So let's see what happens. Let's see what happens. Okay, we did wick into this daily FEG. This daily FEG. Looks like we're respecting. We could look. We could very well go up to up here a little bit. Right? It's not that crazy of a move. $1,000. 3%. It's not bad. If we don't, then we would probably go down to here, next area of interest. But I do like how we tap into that. I do like how we tap into, well, first of all, we sweep all of these, right? All of that liquidity right there. Tapping into an FEG and a volumized order block. Demand zone. Ugh. 2% of that. Right? Break it down to 5 minute. Let me see the point of control. Point control, we can't move away though. Some of these indicators, they are lagging. 100% they're lagging. Like if I put it from here, yeah, it may be a little bit off in comparison to the rest of the stuff. But it's fine. Alright, so we have the 1 hour, the daily agreeing with us. The 1 hour agreeing with us. We have a respect of a FEG order block, but not this breaker blocker. Right? It's like a little small one. A little small respect. See the outline when I hover over it? So that's, I wish we would have respected that more cleanly, but we have the order block on our side. Let me see the order block. Yeah, we have the fair value gap. No inverse fair value gap. We do have market structure on our side as well. Okay. Maybe I don't take all this right here. Maybe I'll take up a second. Alright. Because if we get filled in, I am kind of nervous. Like, oh, sometimes it just goes up here, maybe wick all the way down and then go up. Tap this. That I'm a little bit like, yeah, but let's see. Do we even get filled in? We do. We get filled. Oh, we take the L. Okay, that's fine. That's fine. That's fine. That's fine. Bam. Yo, I swear the volume-wise order blocks were like, it tapped into the 1 hour, so I can't complain. Can't complain about that. That's fine. That's fine. Be down here with 1 for 3 on this. Maybe I should have counted this as one distribution. Maybe I should count this as one distribution. I'm pretty certain they mentioned that it's 2 phases of consolidation. Accumulation. I mean distribution. Right? Is it not two phases? How do I mechanically fix this? And put this on this side. Original. There was somewhere he mentioned there was two phases.
Coming up into the last bullet, and why is the previous high or low the low risk sell or the low risk buy in that market maker? That's the high or low in the structure. You a crude depiction in this market maker buy model. So looking at all the lows and highs being formed around in this area, we can see this is a long-term low. Now why is this a long-term low? It's the extreme low in this whole range, and it has a short-term low to the left. Expect price nothing, which is only an intermediate term low once we form a short-term low to the right of it, right? So we need to have confirmed. So we need to see that short-term low to the left levels of this range. Accumulation high is being engagement block, and once it breaks lower, that short-term high forms in. It's very, very likely that the market is and has turned and is looking for the opposing liquidity or discount and long-term high here. Use this one. You could use the wick of this one too. Engineer liquidity on the sell side. Price trades back up into OTE levels or premium level of this range, right? Creating that low risk sell, forming another distribution phase, dropping lower, and then the silver bullet is the second stage of distribution, and it forms over here. Now let's look at the different highs, right? Low risk sell in this occasion. Start over here. Again, high. Long-term lows and intermediate term lows in the next slide. But we've got that short-term low down here, right? On the smart money reversal, again, on a key level, important. Long-term low down here, because we have a short-term low to the left of it, and a short-term low to the right of it. Bullish order block, shift in order block over here. And now we're going to look at it. Now it's a mitigation block. Or completely going into bottom low. Now we wait for this intermediate term low to be formed, and then go into second. That would be a bearish order block. We're going to look at and confirm the arrays, right? Mitigation blocks, breaker blocks, and then premium and discount levels. We've got that to the right of it, right? And we need to wait for it to decline into discount and use a fair value gap as an entry. So if I go over here, we can outline those short-term lows, long-term lows, and intermediate term lows in the next slide. But we've got that short-term low down here, right? On the smart money reversal, again, on a key level, important. Long-term low down here, because we have a short-term low to the left of it, and a short-term low to the right of it. Bullish order block, supporting price, pushing up, breaking market structure. This is called a low risk buy, right, for smart money. But for us, it's not a low risk buy because it's actually a little bit high risk for us because we don't know if market structure shift will happen. That's why we wait for that market structure shift. And this whole silver bullet setup is a very solid entry model. We anticipate this.
Damn it.
So we're coming up into our final lesson of the top-down
Where's
analysis
the
section.
phases? No
We've
one.
had that long-term perspective,
might be
intermediate-term
in.
perspective, and that short-term perspective with that bread and butter model. And now we're gonna blend it all together and putting it all together.
It might be in this one. I'm not gonna lie.
However, on YouTube, model is it's a hedging program for the market maker sell model here. Models as a range. An MMXM, a market maker buy or sell model, is just a range high to low or range low to high. Low validation, which is a range high. A cumulus buy, you'd be looking for a breaker here as well. So another point of mitigation. So this buy, a discount, and right becomes so you can order position the high of the PD array. Timeframes are by to external array model. There's almost always two stages of accumulation on the sell side of the curve. So as we're dropping down, and in a market maker sell model,
Always.
there's almost always, and this is what it looks like. So plays on, and we trade higher on and clear reverse. See if those candles along there.
Okay. Alright, they say at least 2. So I'm gonna use this one. Alright, we are back. Okay. I think there's gonna be another distribution leg lower. But, it is what it is. It is what it is. This one, don't think we did anything wrong. This one. Oh, one thing was that. So the maybe I need to make it as strict as possible. We must respect breakable offense. We must respect it. Go this way.
Hey guys, what is up? Faz here. In this video, I will explain how price comes back into your high time frame PDA array. Now, once price comes into your high time frame PDA array, and then you have in this, so you have already got so now once after the distribution 2 phase, and then price comes into you have to verify a consolidation phase, and then you have in this cell example. Once you have the first distribution, however, if it's these are just different names like phase 2, so right there. Okay. So let's identify our consolidation phase here. Okay, so just by looking at the price here, you can see we had this consolidation phase here, right? You don't have to overcomplicate this. Look at this, right? It should look like consolidation. Just draw a box and it should look like consolidation, like that. So what happens then is we have a price making us a distribution phase 1, right? Before coming into this fair value gap. So we have a pullback, right? This is distribution 1, and boom, right there. When price comes into your PDA array. So now what we want to do is we want to wait for a shift in the market structure, and right away, what do we have here? We have the shift in the market structure. So now remember the mitigation blocks right here. You can also say that this is a breaker block and also an old auto block, right? So we can, and there's a fair value gap inside this level. So we wait for price to come into our entry zone. And right there is where you're gonna go long, right? Simply put your stop here. Just put your stop right above somewhere around here, and you go for this high, giving you 2.63. And let's see how this plays out. We can take our example. So price comes back into we have distribution phase 3, then we have a Hey guys, so here is example number 2. Look at NAS 100. So these two lines is a daily fair value gap, and now only 1 hour time frame. So price comes into the daily fair value gap here. So now once that happens, we want to identify the original consolidation phase in the sell side of the curve, right? So this is the sell side of the curve. Where is the clear original consolidation here? So this right here is an original consolidation for me. Then we have a distribution phase 1. Then we have distribution phase 2, right? And we have another distribution phase here, right? This around here. So let me mark this out. So you can have unlimited distribution, have a market structure break, learn some other techniques. You can combine these things. So that you can see we have this here, right? And we can target here. So let's see how this trade plays out. And this is very powerful, guys. Like if you use this low gap here, right, in the sell side of the curve here. Now what do we have here? We have a mitigation block, so an old auto block in the sell side of the curve entry here. So let's see how this trade plays out. If so, guys, then we had it here. I recommend you get out when you get do we have?
And ultimately, on a 5-minute chart, you can see this is the market maker buy model. Consolidation, leave the consolidation, come back in. This is your sell, distribution, shift to market structure, smart money reversal, low risk buy, imbalance, carry it through, cut through candles, trades back down in, accumulation of longs, continuously looking for.
Most traders know what a market maker model is, but do you know how to anticipate it? A lot of it is overcomplicated. What you need to learn is how to utilize it on each time frame. To break it down to its simplest form, when there is a 4-hour PD array that is tapped, an M15 market maker model occurs. When there is a 15-minute PD array tapped, maker model. 1 minute there is a beautiful market maker buy model. So after you scale down, you can see that on the 1 minute there is a beautiful market maker buy model that targets these highs, which is the original consolidation. And the same concept is repeatable on the 4-hour.
Alright, one more down. Down, 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 down. Or do we reverse off of this? You know, I'm not really sure. We want to reverse off of this? We could. We very well could. I'm not gonna lie, this overlaps. That overlaps. You know, there's also this little one on here. Look. This is technically the air term low. I mean, it's technically overlapping. Wish it overlapped with a FVG instead. But I mean, you take it low by level. We could say this is the low risk in target like up here. This one is another. This one's like the actual super low. The daily is the actual super too. Actual sweep of a lot of stuff. Like this. But I mean, honestly, the 1 hour is a little bit more. Alright, we got this. You know, okay. What do we got? You know. You know, we have this. Right? Still looking at target this. The daily and the 1 hour, it's telling, okay, looks like a wick up. Alright. Now this looks like the smart money reversal. potential smart money reversal. Alright, we got this ding 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 ding. I thought this was, but no. Swept. This time we actually respected this mitigation block slash inverse fair value gap. Wait, why? Let's see. I see. Would we even get in this? Oh, we would. Okay, we would. I'm watch this video real quick.
Now think, what is an inversion fair value gap? ICT, how do you know when you're doing your live trades and you're annotating them? You're calling an inversion fair value gap before it even forms, before it even trades there. Right. That's authorship. You would expect that, right? So let's go into it here. From this candlestick's low to that candlestick's high. Are you having fun? Are you learning anything today? Because I tell you, man, if I was my 20-year-old self and some guy was on the internet showing me this stuff over live price action, I don't know, I would be giddy. So now think, okay? If I'm bullish, if I'm expecting price to go up to here, and we're only right here, and we're trading up into it, everyone else that thinks that they see this as a liquidity void, or stocks being hunted and a liquidity void, and we're going lower, they would see that as a short entry. Not me. Not me. And I can say that because you watch me do it example after example of live executions. When I called it on Twitter a lot, I would say, okay, take that fair value gap, extend it to the right. What am I telling you? I'm telling you that this right here, this sell side imbalance, buy side inefficiency, where the candlestick's low, that candle right there, which is that. Let me move it over so that you can see again. Let me zoom in actually because I want to make sure you understand exactly what's going on here. I want your money's worth. Okay. So this candlestick's low, and this candlestick's high right here. That portion on this candle, that's what I'm highlighting. What is that? The algorithm will go right back to this time frame, right back to this range in price action, being this. That candlestick's low, and this candlestick's high. And we're gonna darken up that rectangles. That's what I'm highlighting there. Okay. And let's go back out to. Oops, a little too far. Already, some of you
My PC is always broken or something.
see what's going on. I can't believe it. I can't believe this stuff really works. So because I'm bullish, I'm going to look at old sell side imbalance, buy side inefficiencies, or down close fair value gaps as a rock climber. Okay, I'm going up. I'm trying to climb the surface of this rock surface to get to this liquidity. And maybe if I'm strong enough and hold on long enough, I might be able to get to the zenith of that high back there that I talked about real time before I did it. If that's the case, I know that this imbalance exists. Because if this is there on the sell side delivery, part of a what? Part of what? A market that is potentially going higher, then I'm going to treat this as a foothold or a hand grabbing point as a rock climber. And I'm going to wait for it to trade up above it. My hand's going to use it to pull me up higher in my trade. And then I'm going to wait for it. I'm going to get above it and then I'm going to trade long when it moves into this area. Why? Why should I do that? Because it's going to act as support. Because why? If it's going to go higher, it's inefficient over here because it went down on this candlestick. Inefficient delivery and repricing for that range between this candle's low and this candle's high would be seen with candlesticks that go down in that same specific range that's highlighted in orange. Once we got above it, what did it do? It traded down to the low of it. And then what happened? Oh, look at that. Some mysterious movement to the higher side. And it ran into the buy side. Did it stop there? No, it ran right to the low I told you to reach for. Okay, is that hindsight, folks? Is that hindsight? Because this is the logic that I use every single time I'm making executions. Inversion fair value gaps are old inefficiencies that are opposed to the trade direction you're in. When you understand this, you will understand how also my market maker models are not bike off, because this right here is the trade direction you're in. Hindsight, because this is the logic that I use every single time I'm making executions. Inversion fair value gaps are old inefficiencies that are opposed. Hindsight, folks? Is that hindsight? Because this is the logic that I use every single time I'm making executions. Inversion fair value gaps are old inefficiencies that are opposed to the trade direction you're in. When you understand this, you will understand how also my market maker models are not bike off, because this right here is your unicorn. Second stage, reaccumulation. Smooth consolidation. Smart money reversal. Low risk buy. Accumulation. Reaccumulation. Second stage. Where's the biggest move? Right there. Hello. I love this. And we're going to go down into the 1 minute chart. Okay. A macro only exists 10 minutes before the top of the hour. That means, in this case, what time is this? What time is that right there? It's 7:51. Okay. That's 9 minutes before the hour of 8 o'clock in the morning. So if we take a rectangle here and go to 7:50, what is it doing? And no, many times will spool only entry, spool or line rather, with price. I have all these types of things. I don't. What's this low? Let me take the. And it wasn't. This case, this strong. These knees for entries.
All right, you know, I would be enter off of here. Would have already been entered. Off of here. All right, pros and cons of this trade. What are the cons? There's unmitigated PD raise below. Right, we have this breaker blocker, we have this fair value gap. This, you know, it could disrespect this and respect this, right? It could just go deeper retracement here and get a tap off of that. That's one. Two. Two. We could tap deeper into the PD array, but I mean, we take it low by level, where we have this overlapping one right here. Yeah, we take it level by level. We have been going down a lot. I would take a chance, the risk to go up. Alright, potential risk to go up. Let me see. Yeah. It's the pros of this trade. Okay, one, we got this intermediate term high, change of character. Two, we have this mitigation block plus this being respected here. Oh, wait. Wait. Oh, hold on. Hold on. Hold your horses. This mitigation block was actually disrespected, right? Because look, we have this. We close above it with this candle, where my cursor is. Then we close below it, tapping into this, and then we go up. By the rules I just mentioned, this is just, I just mentioned this. So, okay, let's, you know, I'll wait this. I'm not gonna answer all this. I'm gonna wait. I'm going to wait to see if we possibly tap into this one. We get this tap right here. And reason I'm waiting is because we disrespect this breaker blocker. Mitigation block. Yep, this. Yep, by a little bit, tapping into this to go up. And the previous trade, I just mentioned that we disrespected that breaker blocker here. Because we closed above it, closed below it, and it went up. So, on a 5-minute, that's my thing. 5-minute, that's my thing. Yep. So I'm gonna wait this out, right? I'm gonna wait this out until something else happens. Let's see. Okay, good. That's good. That's good. We waited. Okay, that's very good. It's confirming this. That's very good. Okay. So now I'm waiting for this one to tap into it. Okay, let's freaking get it. Well, so we'll have this. Alright, this, no, because we kind of disrespected this. I don't really like that. Mm. No, we didn't respect this one. And if we sweep this, okay. No. That's fine. That's fine. Yeah, that's fine. That's fine. That's fine. That's fine. We take the L, that's fine. That's okay. Or not the L. We missed the trade, that's fine. That's okay. That's okay. Alright, next one is may just go up. All this stuff up here. Sweep all these bad boys. Yeah, there's not really much unless we sweep this. Sweep this. And ideally tap into one of these. That'd be a good trade to take. Yeah, and then yeah, that's kind of it. Unfortunate, we missed it, but stick with our rules. That's fine. We missed it. We missed it. It's fine. It's freaking fine. I'm okay. I'm okay. I'm not tweaking. I'm okay. Okay. Started backtesting part 6. Okay, that's perfect. Then do 1 through 149. Hey. Perfect. So recording. All right, this one. Hey, we didn't respect it. We didn't respect it. Sorry. Sorry, on the 5-minute we didn't respect it. So I'm not gonna take the trade. Even though it would have been a good trade, a little spicy trade. It's fine though. It's fine. It's freaking fine. It's so fine. Alright, next area of interest is up here. or down here. I don't think it's going to. Yeah. It's probably gonna consolidate a little bit in here. Oh, disrupted. All right, we tap into that. Let's see what we get. Let's see what we get. I wouldn't have even looked at this because we didn't tap into it at all. Now, I would argue that okay, maybe this is original consolidation. Now, is it as clean? I know Mr. ICT, he does it all the way to this. He knows a perfect thing. No, but it doesn't really matter if it's super clean or not. I just want a generalized idea, right? Because I'm not like it doesn't need to be clean. All right, we got that. We got accumulation 1, accumulation 2. Perfect. Absolutely perfect. And let's see. Tap into that. we have this. Oh, this is not tapped into. We have this. This is respected. Okay, not respected on this one, but we also got this. We also got this. We also got these. I mean, we initially respected it here. All right. If I were looking at this, I would be like, okay, what do we have? Okay. All right. There's a respected here. Oh, I forgot to show this one. Okay, actually, this is pretty strong. This is pretty strong. You know, I would put it right here. I would enter. I'll enter for this. I'll put it probably right here. Take profit is going to be the low of this stuff right here. Well, this is going to be in premium. Oh, it's not right unless we make a low. Let's make this low. It's gonna be premium. That's what I think. Yeah, we entered. Okay. Okay, before let's go over what we did. All right, we tapped into this fair value gap. Wasn't the greatest tap, but we did sweep a ton of liquidity. We swept this. We swept these. This ding 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 ding. Up here. We have our original consolidation. We have our two phases of accumulation, like 1, 2. All right, we got that here. Now, I know earlier we saw it close above, but I would have already been entered. Like I'm already entered on it. All right, we got that being respected here. We did this. Yep. So, I mean, we also swept all of these. So, is it concerning that we get another sweep up, tapping into this mitigation block? Yes, a little bit. You know, maybe I'll put it up here. I'll put it like, you know what? That is a little concerning. I'll be honest. That is a little concerning. So let's put it at the middle of this figure. Yep. Let's see the point of control. It's lower or higher? It's higher. It's higher. Interesting. Interesting. It's not normally a good sign. Not normally a good sign at all. But I mean, just look what we've done. Okay. What are the pros and cons of this trade? Why would I not take this trade? One, we have an unmitigated mitigation block right here. Unmitigated. So price could very well sweep up and then go down again. 2, something else. We didn't really tap too deep into that fair value gap. We tapped into it, but it wasn't deep into it. So it could very well go up, tap deeper. All right, I'm also gonna. Why do I want to take this trade? Well, one, we have this mitigation block being respected. Actually, this was the breaker. We have the mitigation block being respected really well, overlaps with a fair value gap. overlaps with the inverse fair value gap. So this right here is pretty strong in my opinion. We have the phases marked out properly. We have this. We have two phases of distribution. I mean accumulation. We swept this, tapped into this. We're not targeting anything too crazy. We're just targeting the 50% of that. We have these right here. We could sweep pretty easily and then tap into the 50% very easily. The point of control is not in our favor. All right, it's here. I mean, normally, I mean, we did expand here. I kind of do expect. I wish it would have been a little bit lower. And I mean, this stuff is a little high time frame. It's not as useful. It's pretty high time frame. Oops, let's see this one. You know, I'll take the trade. I'll take the trade. Stop loss is put above this one. I could put it here, but I'll put it to 50% of it. So if you were to wick up, it would most likely tap into a little bit of this and then go down. Or I could frame in two trades where one of the trades yeah, it's happened to the freaking lower part. Alright, I'll take it. Take the L, we take the L, bro. Took the L. Bruh. Would I re-enter on this? Or this is not even respected. No, I wouldn't have even re-entered on this. There's no like this is not respected. Oh, we don't respect this. That's the main issue I have. You know, alright, I would have taken the L. Yeah, would have taken the L on this. Does price go up? I would feel like it's gonna go up. Oh. Hmm. Oh my goodness. Oh my goodness. What are some? Let's go over the successful. I'm gonna have one today. I'm pretty sure. This is like the same trade. Is it not the same trade? Let's see our actual wins. We took one off this? Okay, let me look. It's not quite the same. Took one off of this? Oh. Can we apply it to this? And this one didn't have an unmitigated PD array. Unmitigated breaker. Let's see. Fail. Why did we fail this one? Oh, this was the fail this one. That looked good. Maybe this part is kind of weird. This one, let's compare. This one we used it as our lowest buy. Ugh. Hmm. And this is the same steps I took. Well, we'll just take the L as is how it is. Maybe on, let's say NASDAQ, it's a little bit cleaner. Or maybe the edge is diluted. They diluted the edge. I'm gonna look through more until I hit 37. Success. Yeah, that's another success. Yeah. Look, respect here, went down, respect here, yep, respect there. Respect here, yep. Look, another one, right? This one overlaps. FVG, inverse fair value gap. It's not at the breaker, but still. FVG, mitigation, inverse fair value gap. Yeah, I mean, trades that work, those are the trades. Let me see. Okay, this one, honestly, I'm gonna stop taking these types of trades. This one I should cancel it though. Success, another success. Ferrari, yep, Ferrari, yep. What is that? Third, 51. Respect here. No mitigation blocks until here, which we didn't trade through until here, but failed. This one failed. Why this one failed? Well, looking back, this one failed because we traded through this breaker. And we could say these are the mitigations, right? Well, actually, no, we did kind of respect that. Right at the top of this is here. Yeah. Oh, everything's not 100%. So, what about this trade? What is this trade? Okay. There's no mitigation. I wouldn't have even traded this. There's no mitigation. Like, at all. Oh, this one. This one had an inverse. We respected that. We had a mitigation. Yep. Yep. Respected that exceptionally well. We use that as our stop loss. What else did we have? What was this? What was this? I don't know what this one was. I don't know what that is. Inverse order. Check for that. Okay, check for this. Stop loss here. Okay, you know what? You know what? This is based off of probability. You know, we can't always be right. As long as we maintain our risk management and all that stuff, it's a-okay. So we took an L off of this, so I'm actually minus 1.5. So I'm on for 4. Crazy. Failed. All right, I'm gonna document this. I'm gonna take a break and then go to the gym. I'll be back at like 8:30, because then I gotta eat and do all that stuff. But all right, see you soon.